Welcome back, everyone, and sorry for that break. And thanks for your patience as well. We had a little hiccup earlier, but we are back and ready to roll in again. So, where were we before the break happened? So, I think we were talking about we were about to talk on the I was saying that currently the US dollar appears to be very, very strong at the moment as investors appear to have shifted their narrative and leaning towards the fact that Feds will not be rushing into cutting interest rates anytime soon, especially after the solid US economic data we've seen lately. And I went on to share with us what things are looking like on the US economic calendar, where we saw some the housing start coming in higher than expected. We saw the FOMC minutes published yesterday, and the clues we were able to get from that minute was the fact that Feds are not FOMC members are not willing to cut interest rate anytime soon, waiting for further clarity before they could tamper with the current monetary policy, which for me is more of an hawkish stance. And then we also had some Fed official speeches during the course of the week, like Waller, Bostic, all of which gave us mixed reactions as regards to that. Then yesterday we saw the initial jobless claim coming in a little bit higher than what market were looking at, giving us a red flag in the labor sector at the moment. And we also saw the S&P Global publication from the United States, which gave us an insight into the performance of the manufacturing and service sector of the United States. And if the figure comes in higher than 50, it shows us that there is an expansion in those sectors. And if we look at the actual data, the manufacturing and the services sectors reported a 53.3 and 55.4 respectively, higher than the previous month, and showing us that the US economy is resilient at this point in time. So the dollar continues to thrive on this latest development and knocking down all other assets along the path. And meanwhile, global tensions like the Russian-Ukraine war continues to be a major concern for investors. As we saw last night, Russia attacked Ukraine again with one of its biggest assaults in recent time, which further appears to throw a log into a resolution anytime soon. So this could keep safe haven demand in play, giving the dollar an extra layer of support as well. Now, if we take all of this information and look at the technical aspect of this, which reveals how the sentiment in the market is playing out right now, of course, we want to be looking at the DXY chart, which is what you are seeing currently on my screen. Now, looking at the chart here, remember at the beginning of the week, we captured a rebound in the US dollar, despite the fact that price had been dropping since the beginning of the year. And as soon as price tested the $96.50 level, we saw our price had started showing higher highs and higher lows. And as a result of this observation, we had this ascending trend line in place, and we did agree that this ascending trend, the bullish idea we were looking at. In fact, we were somewhere around here at the beginning of the week. We were just right here, exactly, just right here at the beginning of the week. And we agreed here on Monday that if price stays above the ascending trend line, we will maintain a bullish bias. But if price drops and breaks below the ascending trend, then we will start considering selling the US dollar across the asset. And of course, look at what happened. Price since then had continued to find higher highs, higher lows to further emphasize the strength of the US dollar. And the way it is right now, it appears that there is no slowing down in this movement as price continues to rise from this particular area thanks to strong US economic data, Fed's cautious movement, rate cut bet as well as dropped significantly. At the beginning of the week, it was around 80%. And when I looked at the CME Fed Watch tool this morning, it had dropped to between 73 to 75% chance in September. And of course, the Russian war uncertainty may continue to drive safe haven flow into the US dollar. Now, today, we intend to hear from the Fed chairman during the Jackson Hole Symposium, and the timing of his speech is pegged at 2 p.m. UTC. That's about 3 p.m. local time. Now, if Powell stays hawkish in his remarks or in his speech, that is, focus on inflation and then not rushing to cut interest rates, then the US dollar strength is likely going to continue, and risk assets like gold could weaken. The GBPUSD could also slide as well. But if Powell turns dovish, that is, it signals comfort with cutting interest rates soon, then we may likely see the US dollar soften a little bit. And of course, gold, assets like gold and GBPUSD may find some short-term relief. Now, with this information we have gathered here, how is the asset we are monitoring performing? What is going on in that market at the moment? So the first asset we will take on right now is going to be the USOIL spot, right? And on the USOIL spot, at the beginning of the week, we really did not have any structure besides the key level at the $61.50 level. And I think we went to as far back as April, which projected that $61.50 level as an area that has served as both resistance and support line during that time frame. And it also had played a significant role in determining the direction of price action. And ever since price climbed above the $61.50 level right here in June, price had remained a signal that this level has a strong memory for buying power. And if we look at the last couple of weeks, the $61.50 level had always negated every attempt by sellers to break through. We saw what happened here last week, and at the beginning of the week, we saw how sellers yet still finding it difficult to break through that particular area. And this is one of the major reasons we agreed that we will continue to buy the US crude oil going into this week. And of course, we've done fairly well on that asset. I had my TP hit on Wednesday. I think Wednesday evening, we had a TP hit for the first buy position we took on Monday. Let's scale down into the 1 hour time frame to see what was the structure we were using to guide how our trading decision was like. So on the 1 hour time frame on Monday, we were able to capture a range bound structure right above that key level at the $60.50 level. And you know how we use our range bound structures in this community. Once we sight one, we know that there is an indecision going on in the market at that point in time. And of course, this is a tussle between buyers and sellers, and we wait patiently for one to win. Now, the signal will only come if price action breaks out of the range bound. So if a breakout to the upside happens, we hold on to a bullish bias, and if a breakdown to the downside happens, we hold on to a bearish bias. And of course, you can see from the look of things right from the get-go, it was showing that buyers had the potential of driving the sentiment this week. And look at what happened. Price did break out of the resistant line of that range bound. Since then, we saw price moved over 130 pips since the beginning of the week. And my TP was around the $63.20 area. I got closed out on Wednesday, and since then price action has been running to the upside. You know, I don't trade on Tuesdays and Thursdays, so this was the trading activities from Thursday's trading session. And from the look of things right now, oil prices is holding steady as Russia-Ukraine tensions and possible new sanctions on Russia keeps a risk premium in play at the moment. And the US continues to pressure India with tariff, which also adds another layer of supply risks to go to the crude oil commodity. But on the flip side, stronger US data is cooling Fed rate cut expectation, raises concerns about slower oil demand. I hope we all understand what that means when the US dollar value increases. When the dollar increases, you know what happens? The US crude oil becomes very, very expensive for holders of other currency assets, right? Because the US is a US dollar denominated asset, and for you to buy the US crude oil, you would need to convert your local currency to the US dollar before you can get it, making it very expensive. And when the commodity becomes expensive, what happens? The demand for that product will reduce and it may cap the upward trajectory. So this is why, in as much as we maintain a bullish bias around the US crude oil, we need to be very careful considering the fact that the dollar is very, very strong at this particular point in time. Now, it will continue to raise concerns about slower oil demand. Now, to help me navigate this market today, the final trading day of the week, I have a new structure on the 15 minutes time frame. Now, my structure on the 15 minutes time frame captured the character of price action since Tuesday's trading session. So we are talking about 3.5 days of historical data at this point in time. And when I did that correctly, what I was able to is the fact that price action had evolved into an ascending channel, a series of higher highs and then the series of higher lows. We have a beautiful ascending channel going into today's trading session, right? And when we zoom into the current structure here, if we zoom across and go into the last 24 hours, you see that after price tested the resistant line of that descending channel, of the ascending channel right there, we saw price go into a range bound structure as price remained confined within a 35-cent range, that is between the $63.60 level and the $63.25 area, to emphasize the prevailing uncertainty at this point in time. Now, the question here is, it appears that market participants are now doing some sort of profit-taking activities as the weekend gradually comes in, and as a result we can see that buyers are unable to break out the resistant line of that ascending channel, which makes the possibility of price doing a retracement maybe back into the support line of the ascending channel, maybe in an attempt to continue the uptrend or even breaking it to the downside. Now, how do we navigate this area today? How do we know if the resistant line of the ascending channel will be a barrier or it will set the tone for another wave of bullish momentum? Well, selling pressure around this area is quite evident, and the fact that price remains within a range bound structure, for me, we have no other choice than to exercise patience and wait for price to either break down the range bound to give us an opportunity to sell, or break above the resistance line to give us an opportunity to buy. Well, for me, if you look at the bottom of your screen, you will see that I already initiated a sell position on the US oil, and the reason why I sold is this. At the time I was doing my analysis this morning, price action was oscillating around the resistance line of the range bound, and this was close to the resistance line of the ascending channel. So it was more like prices within a supply niche. So I risked selling around that area. And of course, if price goes ahead to break down the support line here, I will be willing to add more sell. Now, for those of you who are joining us today for a trading opportunity, well, I will suggest that you exercise patience and wait for price to break down, retest the structure to sell the US crude oil. So what I'm looking out for now is to see if a breakdown retest happen. I will be adding more sell positions to my existing trade. So what I will do right now is to move my stop losses on the existing sell position. So I would like to move it to break even at the moment, while I continue to monitor price action. And of course, I would like to add a sell stop order here. And the reason why I will be adding a sell is basically because I already sold, right? And I can afford to risk some of the profit I had made to test waters below that support line and see if that sell is going to work. So I will place a sell stop order right below the structure, and let's see how far that move is going to go. Now, if sellers find it difficult to break the support, continues to be a temporary demand zone, then I will want to see price climb and break above and retest the $63.60 level for me to feel comfortable continuing the uptrend. Basically, what I will be looking at to help me navigate this market today. So our center of focus on the US crude oil is just within this range bound, where we wait for either a breakout or a breakdown to give us a signal of where price is likely going. But from the look of things, and considering the fact that the US dollar is very, very strong at the moment, and considering that today is the last trading day of the week as market participants round up their trading activity, there is a strong chance that we could see some profit-taking activity today that could push price to the downside, maybe into the support line here, or even breaking it further to the downside. I still think that it will still be subject to what the Fed chairman will be saying today. So everyone looks forward to that one. What's the time again? I think it's 3 p.m. local time and 2 p.m. UTC. So let's see what it will say. And of course, if the setup changes along the way, I will be updating us on my Telegram platform. So that is my simple view on the US crude oil for today. I hope I made myself clear. So I will take about 5-10 seconds. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? Are we? Okay, so hope you've marked out the structures accordingly. We have a simple one right here, a range bound, and of course we are waiting for price to either break down the support line to sell, or break above the resistance line to buy. So I wish us all the best of luck on this one. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD. Now, this is the first time we are trading the GBPUSD. I think the second time we are trading it this year, right? We've been running the USDJPY in the last 4 to 5 months. I stopped the USDJPY due to the choppiness in that market in the last couple of weeks. And of course, I also saw a beautiful setup gradually emerging on this GBPUSD chart that made me say, oh, I'm going to take this trade this week. And on the 4 hours time frame, just a quick recap of what we saw here from an holistic perspective. So the GBPUSD has been dropping since July, and we have seen a series of lower highs as a result of that. And when we connected the series of lower highs, we had this beautiful descending trend line to help us navigate this market this week. Now, something interesting happened around this descending trend line. This trend line, as you can see, price has been respecting it since July. We saw it happen on the 1st of July. We saw it happen during the last week of July. And at the beginning of this month, I think second week of this month, we finally saw price break out of that descending trend line for the first time in about 3 weeks. And from a theoretical standpoint, when price breaks out of a key structure like this, we expect that price at some point will come back to retest the structure in an attempt to continue the uptrend move, right? And it appears that is exactly what is going on right now. We saw what happened. Our key level was at the 1.3600 area, a level which was known to be a strong selling niche since May. And we saw what happened when price got into that territory. We saw how it became difficult for buyers to break through that structure. So we saw the first attempt happen here. It failed. We saw the second attempt. Price was unable to even get above the previous high, let alone break it to the upside, giving us a lower high and a potential double top structure ahead of this week. And with the neckline here, of course, a breakdown retest definitely will signal selling ideas. And of course, you can see we sold at the beginning of the week, and then we held on to that position all through Wednesday, Thursday. I think I was taken out of that position yesterday as I was able to scoop in about 100 pips. Remember, we had 2 sell positions. Let me show you. We had the second sell position at the break of the 1.35250 just right here. And the first one was initiated from the range bound structure we identified at the beginning of the week. So let's scroll down to the 1 hour time frame. So this was the structure we were looking at the beginning of the week. We had a range bound following the breakdown of that temporary ascending trend line. Price did a couple of retests of the support line of the range bound structure to incite that sell position. And of course, we had the second sell triggered at the breakdown of the 1.35250 level. So it was more of a very good trade for us as we rode the momentum all the way down. And for me, I moved my stop losses and we got taken out of that sell position. But if you're still in any way or any chance still having the position running, I would advise you to move your stop losses right now, secure some profit as everyone, as majority of market participants round off their trading activities ahead of the weekend. We could start seeing some profit-taking activity happen today. They may start seeing the pound sterling very cheap enough to buy, and this could bring a temporary rebound in the meantime. So please move your stop losses, secure some profit while we continue to monitor price action. And now that we move into the final trading day of the week, how do we intend to navigate this market? What are the chances that both buyers and sellers have? Will the price continue to drop, or are we on the verge of a rebound at this point? Well, currently the pound sterling is under serious pressure as the US dollar strengthens on fading Fed rate cut expectations. And of course, hawkish signals from the Fed officials is also helping the dollar to thrive at the moment. And of course, we saw during the course of the week, the UK economy posted some very, very good figures. We saw their service sector show some resilience. We saw sticky inflation as well. Retail price was high. Consumer price index was higher than expected. And of course, the Bank of England at this juncture faces a tricky balancing act after its recent rate cut last month. And to add to salt to injury is the geopolitical jitters from the Russian-Ukraine situation, and the GBPUSD may remain tilted to the downside based on this based on this data. I don't think these economic figures from the UK could suppress the strength of the US dollar today. But the Fed chairman's speech today is going to be playing a significant role actually, and everyone is suspecting that it will be leaning towards an hawkish remark, that they are not willing to cut interest rate, and this could continue to put some pressure on the pound sterling. Now, to help me navigate today's trading session, I have a simple structure on the 15 minutes time frame I would love to share with you guys. Now, see, this was our Wednesday's trading setup, and of course you can see since when is that? Since the beginning of the week, is it? Yes, the price of, since last week Wednesday, the price of the pound sterling has been within a descending channel, right? Lower highs, lower lows, lower highs. We had lower lows all the way down into this, and of course we saw what happened yesterday. Price broke down the support line of that descending channel to further emphasize the strength of the sellers at this point in time, which for me is a critical juncture. Now, with the breakdown of the support line, theoretically speaking, we expect that price at some point may come back, retest the structure that was broken to incite another wave of bearish momentum. Now, let's zoom into what has been going on here in the last 12 to 15 hours. Now, when we zoom into the structure, it appears that another form of descending channel is evolving at this point. Look at it. This is the last 24 hours here. This is the resistant line, lower highs, and of course we have the lower lows here, right? And right now, price is back into that resistant line here, right? And mind you, this is the support line of the descending channel that we used during the course of this one right here. So we have a room where sellers still have a say to jump into a trade from here. Okay, so let me delete this one. So I still maintain a bearish bias anyways, though this morning when I was looking at the structure, I had a sell stop order right below here. I was thinking that price will respect this one. So I was thinking that price, okay, it was wrong here. Okay, so I was thinking that price will respect this level at the 1.341 to inside the next wave of bearish move, but that did not happen. As you can see, the last 1 hour showed that buyers are still showing some sign of resilience at this point. So I'm not going to be buying. I'm not thinking I'm buying right now, except that this this support line of that descending channel is breached and broken to the upside. So if this gets broken to the upside, then I can feel comfortable buying the GBPUSD. Maybe it's time to start taking some profit, and the market is moving in that direction. So let me mark out a level that I will use to navigate that possibility. So I think we have at the 34175, right? So by the time price breaks out of the 1.34175, price would have broken out of this highlighted support line of that descending channel we marked out earlier. So to give a visual representation of what I'm talking about, so I'm looking at the breakout retest. Of course, we need some confirmation. This is a downtrend scenario, and if we are considering buying, we need confirmations to be sure that buyers have gained momentum. Then we will be joining that uptrend move. But in as much as this is the case, and considering the fact that the dollar is very, very strong, and due to Fed easing bets interest rate cuts, the downtrend is still very much intact. So what I'm going to be doing now is let's remain patient around the 1.34175. We want to watch how the market reacts to this price level. So if a breakout retest happens, we may start considering buying. But if we see a form of reversal setup, that is, buyers are finding it difficult to maintain buying pressure above this area, and it evolves into a double top structure, head and shoulder pattern, then the breakdown retest of the neckline will be the confirmation we need to join a downtrend move. So to be candid with you guys, we are at a critical juncture right now. Price is heading towards a critical juncture around those trend lines we highlighted there. So we'll need some patience here. It could take 3, 4, 5 hours before the pattern is formed, and then after which we can jump into a position. So a quick recap here. We're looking to buy the breakout retest of the 1.34175. We are not placing a buy stop order there. We need some confirmation. A breakout should happen first, and then let's wait for the market to come back, gather some liquidity to continue the uptrend move. Very, very important, because it is a counter. Now, if buyers are unable to break through and we continue to see selling pressure around this area, then it will be a clear sign that the price is respecting the support line of the descending channel, and that could incite a massive move to the downside. So that is what I'm looking at. Our center of focus is around the 1.34175 for today. So let's remain patient and wait for the structure to mature. So that is my simple view on the GBPUSD. If you have any questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for this week. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? And I guess it's on this note we move on to the final asset on our watch list. So I wish us all the best of luck on the GBPUSD. And let me reiterate this it is very, very important that we exercise patience around the 1.34175. It could take 2 hours, 3 hours before that structure emerges, but I'm still leaning towards a bearish tone in this market. I'm still looking forward to continue selling pressure around this area before I jump into the sell. So but if price breaks out and convincingly retest that structure, then we want to start considering buying. So please take note of that. And if anything new comes up along the way, as I continue to monitor price action here, I will update us accordingly on my Telegram platform. So I wish us all the best of luck on the GBP USD. So moving on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold commodity. And of course, this week has been more of a choppy situation, but within the choppiness, price action at least had moved about 200, 250 pips move within those choppiness. And I think we were able to capture some trading opportunity within that scenario. Now, at the beginning of the week, we captured a potential descending channel on the 4 hours time frame. This was our 4 hours time frame at the beginning of the week, after capturing the character of price action in the last 4 to 5 weeks. And one thing we noticed here is the fact that price continues to find resistance along the resistant line of the descending channel we marked out here, to further emphasize the strength of the sellers in this market. And of course, we have enough room to the downside. I think we have over, how many pips is that if price ever falls into this area? That's over 1,100 pips if price moves in that direction. And to help us navigate this market this week, we had our key level at the 3,335, right? And you know how we use our key levels. If price remains above it, we look out for buying ideas. And if price drops below the key level, we look out for selling ideas. And since the beginning of the week, though the market has been choppy, gold has been under serious pressure as the dollar continues to strengthen amidst mixed Fed signals, which has been weighing down on the demand for non-yielding assets like the gold. So at the moment, inflation data keeps the Fed very cautious, but rising job claims means traders still expect some rate cuts this year. And looking at the CME Fed Watch tool this morning, we saw that the expectations for interest rate cut had dropped from 80% to about 70%, which shows that the sentiment is gradually shifting. And this is going to be in favor of the US dollar. Now, this idea for me is capping the strength of the gold commodity. Now, during the course of the week, we were able to capture some trading opportunities. Let me show you how we navigated this market. So at the beginning of the week, we had this range bound structure, right? And of course, price is still back within the range bound, to further emphasize how indecisive this market is, and still remains within that key level we marked out at the 3,335. Now, within this whole structure here, we had some trading setup on the 15 minutes time. Me on Wednesday, let's zoom in here. So we had a structure, hold on a second. So I think I'm beginning to see some bearish signal here. So I'll just place. So this was our structure here on Wednesday, right? So we had a descending trend line. We marked out a descending trend line right here. So it was more looking like price will continue the downtrend move, right? And then to help us navigate the market, to help us make find things easier, we found some consolidation, a very tiny one. Let me zoom in so we can see the consolidation we were looking at on Wednesday. So this was what we were looking at. Price was confined within the 3,003 to 650 and the 3,323. And we said we'll be buying the 3,003 to 650. For those of you who are scalpers and day traders, we said buying above the 3,003 to 650 will be quite reasonable. And then we joined the move all the way up. And then as soon as price gets here, I said we should move all stop losses, secure some profit while we monitor price action around here, as the trend line and the key level could inside a sell-off. But if it gets broken to the upside, it could welcome more buying ideas. And since then, look at what happened. Price moved significantly, moved over 200 pips in that direction before sellers resumed again yesterday. So yesterday I did not trade. You know, I don't trade on Thursdays and Tuesdays. Now, with the way things are going right now, I'm talking about a stronger US dollar, the highest level it has been since early August. And then the Fed's officials' cautious stance on rate cuts. We saw some speeches this week from Hammack, Goldsby, Collins, Wallace, all of them showing mixed views as regards to that, further adding some level of uncertainty into the market. But if we look at the US inflationary data, rising US job claims supporting a dovish bet around the gold commodity. So if we look at it from a sentimental perspective, it appears that majority of market participants will be dumping the gold for the dollar at this point. Then secondly, considering the fact that the dollar is expensive right now, holding the gold might be very expensive for majority and drop this asset. Now, I'm leaning towards a bearish sentiment, actually, from a sentimental perspective, but anything could actually happen. And to help us navigate this market today, I have a simple structure on the 15 minutes time frame, which I'm about to share with you. So this is what I'm looking at right now going into today's trading session. So the first thing I did observe after taking into account the character of price action in the last 20 hours is that price is finding lower lows and lower highs. Look at it. After connecting the series of lower highs, we have the resistance line of a descending channel. And when we connect the series of lower lows, we have the support line of the descending channel. And at the moment, price action remains within a descending channel. And when price remains within a descending channel, it's quite reasonable that we consider selling ideas, right? So that is going to be the idea behind this whole scenario we have here. So looking at the structure and price within a descending channel, the last 8 hours I've seen price confined within this range bound here. Now there is an indecision going on right now. I'm not surprised by this. The Fed chairman is going to be speaking. They are waiting to hear what he will say before the an aggressive bet at this point in time. So the market is expected to consolidate ahead of that event. And what's the time of that event again? We are talking about 2 p.m. UTC, and that's 3 p.m. local time. So that's about 5 hours from now. So 5 hours from now, we are likely going to be seeing some volatility from this particular area. Now, how do we know if we are going to buy or sell from this particular area? Well, we have a range bound, right? And of course, when we have this kind of range bound structure, we want to wait for price to either break out of the resistant line of the range bound structure to give us an opportunity to buy. So if we are looking at buying, a breakout will give us a signal and then a confirmation, like coming back to retest this resistant line of the will be a beautiful spot to capture an uptrend scenario. And if we are going to consider selling at the price, take out all the buyers around the 3,325, the lowest point price action has been for this week to jump into a massive sell. Now, this is what I want to share with you guys. If you look at the bottom of your screen, you can see that I already have both buy and sell triggered on this particular trade. Now, the reason why that is I'm buying here is this. Now, price just left the support line of the descending channel, and from a support line, what do we expect? We expect buyers to come in, right? And if we look at the character of the candles close to the support line, we have more of hammer candles here, which theoretically tells us that buyers are building some momentum. And besides that, we also have some engulfing bullish candles springing out from this particular area, further supporting bullish expectations from here. So I placed a buy here at the 3,330, a level which has been a support line yesterday's session. Look at it right here. So yesterday morning, we saw that same level serve as a support line. And of course, we saw price move about 160 pips up before it dropped back into that particular zone. So I placed a buy position there and it's currently running in profit. Now, I also placed a sell with the hopes that price will drop down and then trigger another one at 3,325. Which is currently running in a loss. So my sell position right now, the stop loss of my sell position will be below the support line of this range bound. Let me put it right away. So if it goes my way, I'm fine. If it doesn't, I'm also fine, right? Okay, let me just place it on my sell. So I'll place it right away. And why is that? 3325. Okay. Okay. My sell, stop loss to my sell will be above the 335. Sorry, I made a mistake there. So my sell stop loss will be above 335. That's above the key level. And my buy stop loss will be below the 3325. That's the support line below the support line of the descending channel. So I'll give enough room for price action to move around, and then I will place a sell stop order below the 3,325 to maximize the bearish momentum if price drops to the downside. So I'll place a sell stop order there, and of course I will place a buy stop order above the 3,335 to maximize the uptrend scenario if price action finally moves in that particular direction. So that is basically how I'm going to be navigating this market today. We're not really sure where price is going to go. The market is consolidating at the moment. We are at a crucial juncture. Everyone is waiting for the Fed chairman to speak in about 5 hours from now before making any aggressive bets. So what we have done now is to position ourselves strategically for the next wave of momentum. Is it going to be bullish? Is it going to be bearish? Well, time will tell. So let's remain patient. Let's exercise our patience and let's wait patiently for the structures to mature. So that is my simple view on the XAUUSD for today. I do hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. All right. So in the absence of